Trading action today in the stock markets gained for the third straight session, with major indices ending at their highest level in almost a month. Sensex gained over 300 points to reclaim the 60,000 mark. Nifty, meanwhile, gained over 100 points, with banks and mid-caps also perking up. Prashant Nair is here joining us with a quick wrap of the day's market action.
Almost at 18,000 on the Nifty today with the rally that we saw. And what can one say? The move has been relentless for the last many weeks, and it just continued as we kicked off another week once again. Towards the end, there was a little bit of come-off, which we saw, but, that's par for the course given the strong gains that we've seen. What did well? Real estate as an index was the top gainer. Media stocks did well. The entire small cap and mid cap part of the market, small caps especially, and of course IT services, which have lagged quite a bit, still quite a bit off from their highs, came up a little bit. In terms of specific names there, Tech Mahindra and Infosys stood out as far as large cap IT is concerned. There were names like Adani Ports, Titan, Axis Bank from the financials did well, Divi's Laboratories, Aisha, UPL, Tata Steel and Coal India. Actually, a bunch of these old economy names did quite well as well. The point is, the market's been doing well in India, irrespective of what the global market scene has looked like. And what is interesting is that last week, the US is starting to fire as well. It's starting to see a bounce. It was down for 3 prior weeks, and last week it ended up about 4% or so. What could be the situation if global markets also see a bit of a bounce? And what could that lead to here in India? Those are questions. In the very near term, of course, 18,000 is something which we will watch. And of course, tomorrow, out of the US on Tuesday, that is, we'll get the consumer price inflation numbers, which for the very near term will set the course.
Right, Prashant, thanks a lot for that. Let's head forward towards the macro numbers that are due later today. Consumer price inflation for the month of August and the industrial output data, again for the month of July, will be released later today. Lata Venkatesh, in fact, is here joining us with a set of expectations. Lata.
Not very sure if CPI is any longer a very big Q. But first, the facts. The CNBC-TV18 poll is expecting a 6.84 reading as the August CPI number, which actually is higher than the July CPI number of 6.71. So for sure, August will break the 4 successive months of falling inflation that we saw. April was a high at 7.8, and since then we have been falling all the way till July, but that won't be August. The number anyway need not be very worrying, because even if it is 6.84 or even 6.9, the average for the quarter comes in at about 6.8 as of now max. But the Reserve Bank has already forecast a 7.9 for Q2. So even a slightly higher number is not going to disturb people's expectations from the Reserve Bank. The point of bother will be cereals. The government has banned broken rice imports for a reason, because prices are going up, and broken rice tends to be also used as animal feed. So it won't be just cereal prices, but it will move on to other products as well, other food items as well. And therefore, that is the only point. It won't be core inflation so much as food inflation that economists will watch out for. Core inflation will come back at a steady 5.8 to 6% that it has been. The number is crucial, of course, because this is the last number we have before the Monetary Policy Committee assembles on September 30th for the policy. Just a word, IIP number also comes out. It's, I think, expected to be about 4.8%. And may look very bad compared to June, but this is more a base effect. Last year, up until June, Delta had kept the numbers, Delta variant of the COVID, had kept IIP numbers low, so there were bigger numbers in all the way from April, May, June. But July, that base effect wears off. In any case, IIP is not a much watched number.
Right, Lata, thanks a lot for that. We'll come back to you when the data points become